The price of silver just shattered every record in history, blasting past $95 an hour ago. If you're watching this right now, you need to understand what this means for your money, your savings, and the global economy. I'm not here to sell you silver. I'm here to show you why this matters whether you own an ounce or not. What's happening right now is bigger than just one metal hitting a new price point. This is a signal, a warning sign, and potentially the beginning of a massive wealth transfer that's already underway. Let me take you back just 15 years. In 2011, silver hit what we thought was an incredible high of $48 per ounce. People were talking about it everywhere. Precious metals were the hot topic, and then it crashed. For over a decade, silver traded mostly between $15 and $30. Boring, predictable, forgotten by most investors. But something fundamental has changed in the last few years. And it's not just speculation or hype driving this price explosion. We're seeing a perfect storm of factors that have converged to push silver into territory nobody predicted it would reach this fast. First, let's talk about what silver actually is in our modern economy, because this isn't your grandmother's silverware we're discussing. Yes, silver is a precious metal. Yes, it's been used as money for thousands of years, but today, silver is absolutely critical to our technological future. Every solar panel requires silver for its electrical conductivity. Every electric vehicle uses significantly more silver than traditional cars. Your smartphone, your computer, your television, they all contain silver. The green energy transition that governments around the world have committed trillions of dollars to, it cannot happen without massive amounts of silver. Here's where it gets interesting. Unlike gold, which is primarily used for jewelry and investment, about 60% of silver demand comes from industrial applications. This means silver has real, tangible, irreplaceable use in the technologies we're building right now. And here's the kicker. We're using more silver than we're mining. For several years running, global silver demand has exceeded supply. The deficit has been filled by above-ground stockpiles, but those stockpiles are depleting. When you combine increasing industrial demand with decreasing available supply, basic economics tells you the price has to rise. But that's just the beginning of the story. The monetary side of silver's surge cannot be ignored. Central banks around the world have been printing money at unprecedented rates since the 2008 financial crisis, and that accelerated dramatically during the pandemic. When you increase the money supply, but the supply of hard assets like silver remains relatively fixed, the price of those assets in currency terms must increase. This isn't silver becoming more valuable in real terms. This is your currency becoming less valuable, and silver is simply reflecting that reality. Investors are waking up to the fact that cash sitting in a bank account is guaranteed to lose purchasing power, while hard assets provide protection. But there's another player in this game that most people don't consider, and that's China. Over the past 2 years, China has been stockpiling silver at levels we've never seen before. Their imports have skyrocketed, and they're not buying it for decoration. China understands that whoever controls the resources needed for green technology controls the future economy. They're also buying silver as part of a broader strategy to reduce dependence on the US dollar. When the world's second largest economy decides a commodity is strategically important and starts accumulating it aggressively, prices move and they move fast. The relationship between silver and gold is also telling us something important right now. Historically, the gold to silver ratio, that's how many ounces of silver it takes to buy 1 ounce of gold, has averaged somewhere between 50 and 70 to 1. Just a few years ago, that ratio spiked to over 100 to 1, meaning silver was extremely cheap relative to gold. As silver has surged to $95, that ratio has compressed significantly, suggesting that silver was massively undervalued and is now correcting. But even at $95, many analysts argue silver is still cheap compared to gold when you look at historical averages and the fundamental supply-demand picture. Let's talk about the mining situation, because this is crucial to understanding where prices might go from here. Silver mining is not like flipping a switch. It takes years, sometimes a decade or more, to bring a new mine into production. You need to find the deposit, prove it's economically viable, get permits, which in many countries is increasingly difficult, build infrastructure, and then finally start extracting ore. Even with silver at $95, many potential mining projects still aren't profitable enough to justify the massive upfront investment and risk. This means even with these high prices, we're not going to see a flood of new supply hitting the market anytime soon. Moreover, about 70% of silver comes as a byproduct of mining other metals like copper, lead, and zinc. This means silver supply is somewhat tied to the economics of those other metals. If copper prices fall, copper mines might reduce production, which means less silver supply even if silver prices are high. Miners can't just decide to produce more silver because the price is attractive. This inelastic supply response is one reason why silver can experience such dramatic price movements in both directions. Now, what does this mean for average people? For you watching this video, If you don't own any silver, should you run out and buy some right now at these all-time highs? That's not investment advice I can give you, but I can tell you what financial experts are saying. Many are cautioning that buying any asset at an all-time high carries risk. Markets can be irrational, prices can overshoot, and then correct sharply. Silver is particularly volatile and has a history of boom and bust cycles. However, other analysts point to the fundamental factors I have mentioned and argue we could be in the early stages of a much longer bull market in precious metals. What's perhaps more important than whether you should buy silver is understanding what this price movement tells us about the broader economic environment. When precious metals surge like this, it's often a signal that investors are worried about currency devaluation, inflation, or economic instability. It's a vote of no confidence in the financial system. Think about it. Silver doesn't pay dividends, it doesn't generate cash flow, it just sits there. The only reason to own it is because you believe it will hold value better than alternatives. When smart money piles into an asset like that, they're telling you something. The inflation picture is particularly relevant here. Official inflation numbers might say inflation is under control, but anyone buying groceries, paying rent, or filling up their gas tank knows the real cost of living has increased dramatically. Silver, like gold, has historically been a hedge against inflation. As people lose faith in the purchasing power of their currency, they shift into tangible assets. At $95, silver is saying that a lot of people, including major institutional investors, are worried about the long-term value of fiat currencies. There's also a fascinating dynamic happening in the physical silver market versus the paper silver market. For years, silver has traded on futures exchanges where most contracts are settled in cash rather than physical delivery. This has allowed for what some call price suppression, where large institutions could sell massive amounts of paper silver contracts to push prices down without actually having to deliver physical metal. But we're seeing increasing stress in the system. The premiums for physical silver coins and bars over the spot price have widened significantly. People want the real thing, not a paper promise. And that's putting pressure on the entire pricing mechanism. What happens next is the question everyone's asking. Could silver go to $100, $150, even $200? Some of the more bullish analysts think it's possible if the current trends continue. They point to the fact that if you adjust the 1980 silver peak of $50 for inflation, that would be well over $200 in today's money. They argue we haven't seen anything yet. More conservative voices suggest that $95 might represent a near-term peak, and we could see a correction before the next leg higher. The truth is, nobody knows, and anyone claiming they can predict short-term price movements with certainty is selling you something. What we can say with more confidence is that the structural factors supporting higher silver prices are not going away quickly. The green energy transition is accelerating, not slowing down. Global debt levels continue to climb, which typically leads to currency debasement. Geopolitical tensions are driving countries to diversify away from dollar-based assets. Mining supply constraints are real and won't be solved quickly. These are multi-year, even decade-long trends that suggest precious metals, including silver, will remain relevant as both industrial commodities and monetary hedges. For those who already own silver, this moment might feel validating after years of watching the metal languish below $30. But it also raises questions about whether to take profits or hold for potentially higher prices. This is where having a clear investment thesis matters. If you bought silver as insurance against monetary instability, then a price increase doesn't necessarily change that thesis. The insurance is still valuable regardless of its current market price. If you bought it purely for speculation, then you need to decide if the risk-reward at current levels still makes sense for your situation. The broader lesson here extends beyond silver itself. We're living through a period of profound economic transformation. The monetary system that has existed since the 1970s, based entirely on fiat currencies with no hard asset backing, is showing signs of stress. Whether that system fundamentally changes or simply continues to inflate is an open question. But either way, the old assumptions about what constitutes a safe store of value are being challenged. Silver hitting $95 is just one data point in that larger story, but it's a significant one that deserves our attention. As we wrap up, I want you to think about what this moment represents beyond just a price chart going up. This is about real resources becoming scarce relative to printed money. It's about the technologies we're betting our future on requiring materials that aren't infinite. It's about the loss of confidence in institutions and systems that we've taken for granted. Whether silver goes to $100 next week or falls back to $80, the underlying message remains. We're in a period of economic uncertainty and transformation, and understanding these dynamics is crucial to protecting and growing your wealth in the years ahead. Stay informed, question the narratives you're fed, and make decisions based on fundamentals rather than fear or greed. That's how you navigate markets like these, and that's how you'll come out ahead, regardless of where silver prices go from here. Thanks for watching.